Welcome, everyone. My name is Chuck Evans, and this is our monthly 30 at noon webinar. And as I say before, we're not here to replace the training that the SBA offers or NAGL or NADCO. We try to bring you just topics of interest, best practices in SBA lending. And today I'm pretty excited because I have my guest, Nick Nofer, who's the Global Marketing Manager for our holding company, IFH. And he had a vision, and he's implemented this vision. And frankly, selfishly, it's going to make my job easier because we've signed up at Windsor 60 to 70 new clients in the last 18 months, and many of them have the same issues. What am I doing in my own market? What's my market look like? And historically, it's always been difficult to get this kind of information from the SBA. It's all public knowledge, but this, for the first time through Nick's vision, is something that you can have access to. Welcome, Nick.
Thanks, Chuck. Thanks everyone for joining today. So, like Chuck said, I'm part of the marketing team at IFH, and I do a lot of the marketing for Windsor Advantage with the end goal of really helping lenders around the country create a better SBA lending strategy. And obviously we want to help them do whatever we can to help them do more SBA loans. And it may sound like a cliche, but I think data is one of the most powerful tools we have at our disposal to help us make better strategic decisions. I'm a firm believer personally that when you combine data with just good old-fashioned intuition and experience, this is ultimately going to lead to the best strategies. And as Chuck mentioned, fortunately in the SBA industry, a lot of the data points related to the loans conducted through the SBA 7A program, it's all public information, which means there's a wealth of data out there to help lenders understand the SBA landscape from a national level as well as a local and regional level. Also, like Chuck mentioned, the tricky part about it is this data isn't put out in a way that's easy to analyze or digest. It's put out in a massive 150 to 200 megabyte Excel file that every time I try to open it, it takes about 5 minutes to load on my computer. Once it's actually loaded, it then takes some serious effort to present that data in a way that will actually help you make meaningful strategic decisions. I personally feel like my Excel skills are pretty decent, and even I struggle to work with that file. And at Windsor, some of the employees, as well as myself, has had the real pleasure of spending countless hours with this file to create reports for lenders. And after doing this enough times and pulling our hair out enough times, we kind of realized there had to be a better way. So we decided to create the SBA Atlas, which is an online platform that does the heavy lifting of segmenting this data and displaying it in a way that's easy to read and digest. We made this platform available to our employees, our customers, as well as the wider SBA lending community. People can customize this data however they want to see it, by specific timeframes, by fiscal year, and then by region to analyze that data to make strategic decisions. Or honestly, like I've seen other people use it, just see how your company's SBA volume ranks compared to your friend's company. So the data's you can do whatever you want to do with it, and we're not going to make any judgments. We're giving you the data to use however you see fit.
You can drill down by county, can't you, Nick?
You can, yes.
That's awesome.
So in this webinar, I'm going to walk through the functionality of the SBA Atlas using two hypothetical scenarios. And what I want to do in these scenarios is help illustrate how you can take this data and then interpret it to inform your SBA strategy. We're also going to walk through the two different versions of the SBA Atlas platform. We have the version that's available to anyone who creates an account. This is our standard access. And then a premium version that's available to Windsor's customers and partners. And I know we have some customers on this webinar today, so hopefully when I walk through that, they can kind of see the full breadth of the platform. And another thing to note is we've already done a lot of research on a couple specific markets ahead of time. So I'm going to walk through what this research showed us and some of the most interesting data points we gathered that really could craft an SBA strategy out of. And kind of my hope here is that I'll be able to provide you with a roadmap for how you can use the Atlas to create data-driven decisions at your institution. So I am going to switch now to showing the SBA Atlas itself. So this is the landing page for it. If you haven't registered already, all you need to do is just enter in this account information and you'll be good to go. And then once you're in there, the way people are able to search is by selecting specific years, selecting specific locations, and then viewing the results. So like I said, I'm going to talk through a couple different hypothetical scenarios. So first scenario, I'm going to pretend like I'm someone else. I am not in marketing at Windsor Advantage. I am a chief lending officer at a community bank located in Illinois that has, let's say, about 3 to 4 local branches. This community bank has done 3 or 4 SBA 7A loans in the past year as we were introduced to it through PPP. Myself and kind of the rest of the team were aware of the general benefits of SBA lending, both for small businesses and lenders. And now my job is to research how expanding our SBA program can help grow assets of our bank. So some of the things I'm going to look at are, what does the Illinois market look like in general? What industries could provide us opportunity to grow assets? What's our competition? And how could we potentially expand our footprint? So to do this, I'm going to select 2016 to 2021. So this way we have enough data to make it meaningful, but we're not looking too far down into the past. So once I've done this, then I'm going to select my region. So I'm a local lender in Illinois, so I'm just going to select Illinois. If you operate in a wider region, you can select multiple states at a time. You can even select the entire country if you want. Then I'm going to hit see results, and that takes me to the results page. So it takes just a second to load as we're parsing through all of that data. So up top here, I have what I kind of call like the KPIs of the SBA loan market in Illinois. So in this time frame from 2016 to 2021 in Illinois, there's been 10,800 loans conducted for a total volume of about 5.5 billion. This gives us an average loan size of 500,000. So this gives you just a rough general idea of what does the market look like in your area. Then we break down that data by first industry. So we spent some time digging through this data, and a few things really stood out to us. The first of those are that looking at this general freight trucking long distance, as well as if we scroll to number 2, general freight trucking local, those are the number 6 and number 13 industries by dollar volume in the region. I'm going to flip over to what I already have, which is the national data. So this is looking at the entire country from the same time frame, and the trucking industry isn't even on the first page. It's not even on the second page. We have to go all the way down to the 24th and 25th ranked industries in the country. So what this tells me is that trucking is disproportionately higher in Illinois compared to the rest of the country. So knowing this could make a strong case for targeting this vertical for SBA lending. Especially in Illinois, it's been successful in the past. You can infer that these companies need financing. And also, given that there's so many loans conducted in this region for that industry, it lets you know that these businesses fit well into the SBA lending criteria. And if you're a lender that doesn't do trucking with conventional loans, due to the SBA guarantee, you may be willing to explore this industry further, especially since it's obviously so prevalent in the state. This could be a way to expand the markets you lend to in order to grow overall assets. Another industry that caught our eye was, if we go to the 4th page, you'll see here veterinary services. This is the 40th ranked industry in Illinois, doing a total volume of just under 30 million. The reason this caught my eye is if we go back to the national data, the same industry is ranked number 11. So this is a pretty big disparity between being almost a top 10 industry in the country, but in Illinois, it's a top 40 industry. So this tells me that there probably aren't any specialized local lenders in this industry. And my assumption is that there aren't less pets in Illinois, or there aren't less animals that need veterinarian services. I'm thinking it's that there's not a specialized lender in the space. And on top of that, maybe the community isn't aware of the benefits of SBA lending. So knowing that this is, almost a top 10 industry nationwide, meaning that it fits the SBA criteria well, they obviously have a lot of financing opportunities, but for whatever reason in Illinois, it drops all the way down to number 40. Specializing in this specific industry could be a way to build a larger presence in order to grow assets. Last industry that caught our eye is here, the car wash industry. The reason this is interesting to me is if you look at the volume of almost 96 million, but there's only been 51 loans conducted. So if you take that average loan size, this means the average loan size for the car wash industry is almost 1.9 million. This is, going back to the average loan size overall, almost 4 times higher than average loan size of all the industries combined. It is actually out of the top 50 industries in Illinois. It's the second highest average loan size, only behind hotels, which makes sense, honestly. So if you're really looking to grow assets at your institution, this is a really good data point to know that car washes with an average loan size of 1.9 million, only a few loans in this space, and you can increase assets significantly, obviously depending on your overall growth goals. So let's now move to the second table, which is the lender rankings. So this gives you an idea of who's operating in your space. You'll see here that Byline Bank kind of is by far the largest lender in the space. They've done almost 900 million of the total volume, which is 20% of the total dollar volume in Illinois. This is a pretty staggering number, honestly, considering that there are 340 institutions that have done an SBA loan in the space, and 20% of that volume is all for one lender. So what I do as a marketing person here is I would kind of say, how can we learn from their strategy? They've obviously done a really good job targeting not only Illinois, but if we go back to the nation data, they're number 4 in the nation. So they've done something special here, where they are the number 4 lender in the nation and more than double the number 1 lender in Illinois. So things I would look at for Byline Bank would be, researching their overall strategy and their team. How do they market themselves? How do they target specific industries? How do they train their BDOs? How is their department structured? Learning from this information from somebody who's already done it successfully can really help you out a lot, especially if you're just getting started in the space. Another thing that stood out to me when looking at kind of the lenders overall is just how few of them are actually based in Illinois. So looking at the top 10, there's only 4 that are based in Illinois. And then if we actually filter the lenders, we allow you to filter by specific state. So now we're just showing lenders that are based in Illinois. Remember that I said that there were 340 lenders overall that have done a loan in Illinois. Now there's only 13 pages. So this drops to 124 institutions that are actually chartered in Illinois. So only 36% of the lenders that do loans here are actually based in Illinois. What this tells me is there's room for regional lenders to position themselves as the local lenders for their communities. Marketing distinct benefits of utilizing a bank with your footprint in an area could be a good way to stand out amongst a lot of the other lenders. Another thing that stood out to me is Village Bank and Trust. So they're the number 2 Illinois lender in Illinois and the number 6 overall. The reason I kind of looked at this bank a little further is that you'll see their loan volume for this time period is 165 million. Let's go back to the nation data and search for that same bank. It's going to take a second to load because there's a lot of data going through here. So nationwide, they've only done 181 million. Compared to in Illinois, they've done 165 million. So over 90% of their total SBA volume is conducted in Illinois. So this is kind of one of those lenders that is a regional lender that has decided we're going to heavily focus on our footprint. And if this more fits the criteria of your bank, so you're a regional lender, this is someone you'd want to look at and look at how they market themselves, how they form their SBA lending department, how do they strategize in terms of industries to target. because they've obviously done a good job to grow to the number 6 lender overall. So looking at the next table, county rankings. So if you know anything about counties in Illinois, should not be very surprising to you that Cook County is by far, by a large margin, the number 1 county in Illinois. This is the heart of Chicago, so it makes sense that a large portion of the volume is done here. One thing that's interesting is if you look at the top 5 counties, so Cook, DuPage, Lake, Will, Kane, this accounts for 80% of the total volume in the entire state. So if you're a lender in these counties, or perhaps you're in a different county, this is really good data for you to know that 4/5 of the total volume in the state is really only focused on these 5 counties. So now moving to the last table, this is showing the loan volume trends over time. So given the years that we've selected, it shows you how those metrics are trending. You'll see here that there's been a sizable increase from 2020 to 2021. It's moved from 876 million to 1.1 billion, which is about a 30% increase year over year. Now, comparing that to nationally, so let's go back to the nationwide data, it actually is not as big as the nation as a whole. The nation as a whole has grown from 22, almost 23 billion to almost 37 billion, which is about a 60% increase. The reason I point out this data is if you're looking to formulate an SBA lending strategy and want to get the entire team on board, showing this data point that in our region it's growing 30% year over year is a great way to have a rationale for this is becoming more commonplace for lenders to actually offer SBA lending. And it's, people understand the benefits and now they're really driving into the program. So some of the key takeaways from looking at this data that we've gone over, trucking industry, that's one that's focused on Illinois, disproportionately larger. Veterinary industry, conversely, is disproportionately lower. So another good industry to target, given that there potentially aren't many lenders specializing in it. Another takeaway is those car wash loans. Average loan size of almost 1.9 million. That actually really surprised me. Also, understanding what competition you should research and look into, as well as understanding what competition that you want to kind of mimic yourselves after or learn from. So that is scenario 1. I'm going to stop sharing my screen for a second, log into my other account, that's the premium version, and then start going through scenario 2. So bear with me just 1 second while I do this. Chuck, I don't know if anything from that data really stood out to you.
No, it makes sense because there's a lot of community banks that are just struggling with, strategically how we're going to grow our program. And this is most helpful. So we have several hundred registered so far, don't we?
Yes. So we have quite a few people.
Since December 15th, yeah.
From all over the map who are using the SBA Atlas in terms of, local lenders, national lenders, more
SBA.
The SBA, companies that support SBA lenders. So that's great to see.
Yeah.
Cool. So I'm going to share my screen again. And another thing I want to note is if you have any questions about the Atlas or anything else, feel free to put them in the chat. And then when I am done running through this scenario 2, we'll answer whatever questions you may have, whether that's about SBA
we'll send this out to everyone, correct, too?
Yep, we will.
Yeah, that was a question earlier. Oh, good.
So now I'm in an account that has premium access. Like I mentioned, this is what we give to our customers and partners as a way for them to really have a tool that has more robust data, as well as a little bit of different functionality. So once again, I'm going to be someone else in this scenario too. I'm going to be a SVP of SBA lending at Banesco Bank, actually a real bank in the Miami area. They have about 5 to 10 brick and mortar locations in the South Florida area. They've actually been operating a successful SBA program for quite some time now, primarily focused on lending to small businesses in South Florida. But now they're looking to grow their SBA program. They're looking to grow not only the loans they do, but also become more efficient and less risky in the process. So I am going to go in here and evaluate how I can kind of use this data to accomplish some of those goals. So I'm going to do the same time frame, 2016 to 2021. One of the new pieces of functionality is that if you're a bank like Banesco Bank and you focus on not just a state, but a specific area of that state, we allow you to drill down into the county level. So they operate primarily in the South Florida area. So I'm going to select just a few counties here and then hit see results. So it's going to load here, give it a second. So once again, you have your primary KPIs, about 7,500 loans conducted in this region of these 6 counties, for a total volume about 3.5 billion. So now looking at the industry breakdown, once again, we analyzed this and we kind of said, what meaningful information can we get out of this? One thing that stood out to us is these 2 industries here, offices of physicians and offices of dentists. The reason this piqued our interest is these are the number 2 and number 3 industries in the region. If we go back to our national data and scroll up, they are actually the number 5 and number 10. So once again, these are disproportionately higher in the South Florida region for whatever reason. I've never been to South Florida, so I can't really speak to that, but they are disproportionately higher. Another thing we want to look at is a new data point available, which is charge-off data. One note I'll make about charge-off data is that this is different than the default rate. A loan can be declared to be in default by a lender, but then they must go through the process of charging it off with the SBA, which can take some time. So these metrics will not be the same. The default rate and the charge-off rate are not the same, but the SBA only reports on charge-off rate. So this is the metric that we must use to evaluate the industry's propensity to go into default. So one thing that stood out to us here is you'll see these 2 industries, offices of physicians and offices of dentists. Not only are they 2 of the 3 largest industries, but they also have not had a loan charged off in this time frame. So out of all the loans conducted from 2016 to 2021, not a single one has been charged off. You kind of look at a lot of the other industries in the top 10, we've got some relatively high charge-off rates for some other industries, but these are 2 that, from looking at this data, you can say they're a bit less risky than, say, full-service restaurants or child daycare services. So for me, as a lender in this region, I would say these are excellent industries to target for a couple reasons. They're both top 10 industries regionally and nationally, which means they fit the SBA lending criteria well. They obviously have very low charge-off rates. So I would heavily consider targeting these industries. And now I have the data to back this up, to send it to our credit team, send it to our BDOs, whoever else needs to know this. Another data point that's interesting is this full service restaurant charge-off rate. This one you'll see is much higher than a lot of the other industries. This is 4.55%. So almost 5% of those loans have been charged off. If we actually look at the national data, this kind of caught my eye, where looking at the national data, only 2.14% of the loans in the same industry were charged off. So in the South Florida region, full service restaurants have double the chance of being charged off compared to restaurants nationally. This is a really good data point for your entire team, from BDOs to underwriters, to know that when you're talking to full service restaurants, particularly in the South Florida region, you want to know that they have double the likelihood of charging off compared to restaurants around the country. So we really love just looking at the charge-off rate industry by industry. The Windsor Advantage underwriting team actually utilizes the SBA Atlas now to inform them when they're looking at industries. Here is the relevant charge-off rates. Here's the volume charge-off rates associated with that. So it can kind of paint a good picture and set guardrails as to industries that you should really target versus industries you should only consider on an exception basis. Another thing that stood out to us in the South Florida region is we look at a lot of these charge-off rates and then also look at the same charge-off rates for the same industries nationwide. It stood out to me that as a whole, this region has a higher propensity to be charged off. Another good thing to know if you're in this area, whether you are actually based in this area or you're a national lender lending in this area, it's good to know that local charge-off rates actually could differ pretty heavily from the national average. So if you're focusing on a specific region, it may make more sense to look at the charge-off rate based on the actual region as opposed to the national average. It really was interesting to me that the South Florida region, almost across the board, almost all industries we looked at had a higher charge-off rate in this region compared to nationally. So another thing I want to look at, another aspect of the SBA Atlas, the franchise-specific data. So we take all the SBA data and now just report on loans that were done for franchises. So there were 575 loans conducted for franchises in this region for a total volume of 302 million. So we list here all of the franchises that are done. Also going to charge-off rate, another thing caught my eye here. So if we expand to 50 results, take a look at the charge-off rate for all of these franchises when scrolling through the top 50. Very interesting to me to see that not a single one has been charged off. If we look at not just franchise data, but all data, a fair amount of the industries had charge-offs when compared to just franchises. Not a single one in the top 50 has been charged off. So this is good to know that franchises in this region appear to fare well that when compared to the industry average. So this can not only inform your underwriting team when underwriting franchise loans, but also could be a really good space to target, given that, there's a lot of opportunities here as well as very low charge-offs. So now let's go back to all data and let's look at the lender breakdown for this region. So like I said, I'm from Banesco Bank. Given that I'm the leader of the SBA lending team here, I've done a pretty good job. I'm number 8 in the region. I'd pat myself on the back if I was the Banesco guy. So we've done just under 90 million in total volume, and we ranked number 8 in the region. One thing that's interesting to me when I looked at this is if I go back to all data, and I'm going to clear that filter, and I'm going to look for Banesco here. Hopefully it's loading. We're having some loading issues. The point I wanted to make is that Banesco, a lot of their loans are actually done locally, only in these specific counties. I want to say it was about 90% of their loans are local. So this is an interesting stat to pull to know we are a very hyper-focused lender on the South Florida area, as well as we're a top 10 lender. And for me being a marketing person, one thing I was interested in is to look at if they ever tout the fact that they're a top 10 lender regionally. So when I looked at their website and even went to their SBA loan page, they don't mention anywhere that they're a top 10 SBA lender in the South Florida area. I think this is a good way personally to differentiate yourselves from the competition and really add credibility. So this is a stat that I would send to my marketing and sales team to say, hey, if you're talking to a prospect or if you're in an event, we can say that we are a top 10 lender in that space. So that's a really good thing for us to market as a way to add credibility to us. Another thing when looking at Banesco, so if we go to another tab, the average interest rate tab, one thing that was interesting to me is if you look at the average interest rate of Banesco, which is 5.4%, and compare it to a lot of the other lenders, we are much lower. We price our loans significantly lower than a lot of the other lenders in the space, other than Paradise Bank, which is pretty close to us. So this can inform Banesco how their market pricing compares to that as compared to the rest of the country, as well as where they stand regionally. Another thing that was interesting to me is how many similarities there are between Paradise Bank and Banesco Bank. So looking at
now, remember, Nick, my friend Kevin Rafferty from Paradise is on the call. So
I won't say anything bad about Paradise, I promise. So Paradise Bank, the reason that I think they're so similar are looking at 3 different data points. So one, looking at the data point of average loan size, So Paradise Bank has an average loan size of 1.3 million, significantly higher than the regional average. If we go to Banesco, they have a 1.5 million average interest rate. So these are kind of two of the lenders, especially two of the top lenders, that both have a much higher average loan size compared to the rest of the market. Another thing is their average interest rate, similar as well. Also, they're both heavily focused in the South Florida region. Paradise Bank does a bit more outside of South Florida compared to Banesco, but they're both over 50% in the South Florida region. So if I was a person at Banesco, I would look into Paradise. I would want to understand my probably most relevant local competition to understand what industries do they target? What are their marketing and sales tactics? How do they structure their team? Then once you know this, you can either find ways to target areas they aren't targeting, so you can try to dominate those areas. Or if you want to try to pursue the same verticals, that's another strategy to use as well, especially if you can identify some sort of competitive advantage over Paradise Bank. So now looking at top counties. So this is obviously only going to show the 2 counties here, or the, sorry, 6 counties here. You'll see that Miami, Broward, and Palm Beach account for a large percentage of the overall counties. This is good to know when your BDOs are targeting this specific area, that really these 3 counties account for the vast majority of the volume done in this region. When you compare this to, let's say, Hendry County, that's one that is just minuscule compared to the others. Another new data point in the premium version is looking at delegated versus non-delegated loans. One thing that stood out to myself, as well as a lot of other people on the team, is just how many of the loans are done with delegated authority. Total dollar volume, 96% of the loans are done delegated. When loans are done with delegated authority, they typically move through the process faster. So borrowers may be expecting their loans to be done more quickly, just based on the fact that 96% of the loans are done via this method. This is good for your team to know just when setting expectations with borrowers and just to understand how the industry operates as a whole. Now, looking at the last chart here, loan volume trends over time. So I said that Illinois was growing at about a 30% year-over-year rate. South Florida area is actually closer to the national average of 60% year-over-year growth. In fact, in South Florida, it's a little higher than national average. I want to say, if I remember correctly, it was 63% growth year-over-year. So this is substantial. This is really good to know if you're a lender in this space, that, you know, increased competition, but as well as increased presence and understanding of SBA loans in the area. So key takeaways here, if I am a lender at Banesco Bank, are that I would really want to potentially focus on these offices of physicians, offices of dentists, given that they're high loan volume, low charge-off rate, really good ones for us to target. I would also want to really understand this charge-off rate with full-service restaurants in the area. And I'd want to give this data point to the rest of the team so that everyone understands that not only is this a pretty high charge-off rate, but it's also more than double the national average for the very same industry. I'd also want to really look into Paradise Bank. If I was Banesco and I haven't done that yet, I would make a point of doing that. I would also want to, you know, probably tout the fact more that we're a top 10 lender in the region with our marketing and sales. I didn't see that anywhere on their website, and I would do that if I was in marketing at Banesco. So really, I want to make the point that this data is here for you to slice and dice however you see fit. And we didn't choose these regions for any particular reason. We kind of chose them at random. So based on your unique scenario, this is going to tell you very different things. You know, we pinpointed the data points that really stood out to us, but when you go in and start evaluating your specific region, you're going to see some different things and some things that may be new to you. So we hope that the learnings from here really can help you understand the SBA industry in your region and help you ultimately build a better strategy. So I'm going to stop sharing right now. And feel free, if you have any questions, feel free to ask them in the chat and we'll get to as many as we can.
Nick, we have 3 questions.
Cool.
First one was, can I determine how many states that a certain lender is involved in quickly? In other words, let's take Paradise Bank. How can we look at Kevin's kind of portfolio and what he's working on?
So what I would say for Paradise Bank is what I would do here. So we don't have a super easy way of doing this,
Okay.
but there's a way to work into it where what I would do is we know Paradise Bank is based in Florida. We can look at how much volume do they do in Florida, take a look at the national average, and that kind of gives us an idea of, okay, they do 50% of their volume in Florida. We know that. Then you can start looking at other areas in their region. So do a search for Georgia, do a search for South Carolina, and see where does Paradise Bank rank there. Then once you know that, you should have a very good idea of, all right, they have 50% of their volume in Florida, let's say another 20% in Georgia, 10% in South Carolina. You can start to piece together all the pieces there.
The second question, thanks, Nick. The second question, how do we calculate the charge-off rate? And we don't. It's just SBA information that we gleaned from their public.
So yeah, so the SBA puts out in their massive Excel file, they basically say, is this loan charged off or not? So what we do to calculate that is we say, okay, out of all the loans in Florida, so going back to that South Florida, there's been 7,600 loans. To calculate the charge-off rate, we take that file and say, how many of those have the designation in the file of being charged off? And that's how we get the charge-off rate. So say out of that 7,600, 700 have the designation of charged off. That means we calculate a 10% interest rate. Then we boil that down to industry and lender, so you can get kind of that segmented data. But it all just comes from the SBA. They say, I want to say the data point exactly is loan status. So we'll say loan status is still just an active loan. It's a canceled loan. It's a charged off loan. And then there's a couple others, but that's what we look at to calculate that data point is what is the designation from the SBA.
And our friend Steve Dixell's on the line, and he did a lot of that modeling for the SBA. So we could probably get it a little deeper if we need to, if the question wasn't answered. But third question, and this is an important one. This is all great information. I want to present something to my board. And how do I print? How do I export? Can you go over that for a second, Nick?
Yeah, so I will say we have a export PDF feature that is still in the works. It's still in development. So we're working with our team that built this to get that feature out to everyone as soon as possible. So we'll be sending out an update when that specific feature is ready. Expect that pretty soon here. But what you can do in the meantime is either just take screenshots of the tables and kind of build it into a Word doc on your own, or you can print the entire screen. So we will have a more user-friendly way to do this soon. But in the meantime, there's a few workarounds in terms of just printing the tables. Another thing is that in the premium version, we allow you to export all of the specific table data as a CSV. So I'm going to share my screen again so I can show you where this is.
Awesome.
So you'll see here for the industry breakdown, if I go to loan volume, you'll see this little button here, export CSV. So if I want to basically download all the data that is in this loan volume table, I can do that, and then I can manipulate it however I see fit. So we allow you to do this for all of the different tables we have.
Great. There was a couple other questions. Let's see. Is there a way to see or calculate total portfolios? This is the second time this question's been asked for an institution or a total group of lenders. The answer is no, but I think it's because the SBA does not provide that information on a public basis. Is that correct, Nick?
That is correct. So, one of the limitations we have in this tool is we're taking the data from the SBA. And like you mentioned, the SBA does not report on a institution's total portfolio size. So unfortunately, that's just not data we can pull into this.
Okay, can we pull out charge-off rates by industry and toggle high versus low, or is there a quick way of doing that?
Yes, there is. So here we have charge-off rates. Sorry, that's the lender table. So charge-off rates by industry. So right now it's sorting by loan volume. If you press this here, you can then sort it by the actual charge-off rate. One thing to note, because this always trips me up, is of course there's going to be some outliers that have a very small sample size. So if you're looking at an industry that only has 2 loans, yes, it has 100% charge-off rate. That's good for you to know, but also be aware that the sample size is just incredibly low. So a lot of these that have like very, very high charge-off rates is just due to the fact that the sample size is so low. But like I said, it's still good data to know. So you, yes, can toggle by charge-off rate by industry and kind of move down the table. And then once you move down, you'll see that we're starting to get some industries that have a higher sample size.
$1 million question. How can we obtain access to the premium? Do we have to be a Windsor client?
So yes, right now, this is kind of like a value-added tool for our customers. We want to make our customers as successful as possible. So currently the SBA Atlas premium version is only available to customers and our partners.
So Carlos, we could work out getting you to become a customer. That would be an easy thing for us to do, right?
You can call Chuck's direct line.
I think let's see if there's any more questions. Hold on a second here, Nick. We're running out of time. We got that's done. Let's see. There's a chat box. Okay. How do we sign up for the premium version and what is the cost? We answered that. Okay. Got to be a client or a partner. So I'm excited.
I think we're good.
Yeah, this is a great tool, and we're going to be able to eventually print the graphs, right?
Yep. And so be on the lookout for that. I will I'll update our entire database once that feature is out. Last thing I'll say is, so if you haven't registered for the SBA Atlas, if you go to Windsor Advantage's website, you'll pretty quickly see where to navigate to it. You can also just type in SBAatlas.com, and that's the URL to direct you right there. So feel free to register for an account. If you have any questions or feedback or things that you think could make this tool better, we're all ears. This is the version we have live right now potentially is not the final version. We have the ability to upgrade this, update it as we gain more feedback. So there is actually, if you log into the SBA Atlas, you'll see there's a button to contact. So feel free to send a contact form to us if you have any issues, questions, or feature recommendations, as we're always looking to get real world insights from lenders as to how they see value in the tool, as well as how they think the tool can be improved. So feel free to.
Done a great job. 43 days old, I think it is, since we started this.
Yep.
And so it's going to grow, and it's going to be a great tool for a lot of folks.
Awesome. Well, thank you everyone for attending. Hope you have fun exploring the world of the SBA industry with the SBA Atlas. One
last thing, our 30 at noon webinar next month is going to be Thursday, February 17th. I think that's correct. And my guest then will be Paul Santamaro from Fran Data. And he's going to basically go over a 2022 vision or outlook, along with the top 5 or 6 franchisors that have survived COVID and are expanding. So stay tuned. We'll let you know, but February 17th. Thank you, Nick. This has been great. Thanks, everyone. See you next month.
See you, everyone.